You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 16th day of August, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do two every trading day. Now, the first one is private. That's our live training room. That's reserved for members only and those who are taking their 1 week free trial. If you have not taken your 1 week free trial, you can go to mytradingiq.com. At the top of the page, just click the purple button, fill out the registration form correctly and honestly. It's an automated process, and if you don't, then we won't get it, and you won't get a free trial, and nobody wins. But if you do it right, we'll get it. We'll get your indicators set up today, your desktop and your indicators indicating. So you'll have the weekend to get familiar with things, and then your free trial will actually begin on Monday and run all the way through next Friday. When the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break. Then we come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's two different ways to join this afternoon broadcast live. Best way, you only have to do it once. Go to mytradingiq.com. And this time, scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. Going forward, what will happen is every trading day, about an hour before this broadcast starts, you'll get an email. In the email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. Now, the benefit there is you'll have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, you can't join live, but you want to get caught up later. You can do either of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. You've already got the YouTube part memorized, so really all you have to remember is CFRN. Not only do we broadcast live on our YouTube channel every trading day, as we're doing right now, simulcasting, if you will, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, You can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, then jump to another day, week, month, year. Do the same thing to your heart's content. youtube.com/CFRN. This is our daily schedule each and every day. So we're going to jump right into our daily devotional. And we're starting a new topic today. And we'll be in this topic for the next 5 days, including today. Faithful Man. Devotions for living in faithless times. And I gotta say, if there's ever been a time in the history of the world where we were living in faithless times, this would be it. Now it says faithful man, but that's just a title. Women, you're included as well. Our scripture today is from Matthew 5, verses 33 through 37. And I'm going to share it with you from the Message translation. And don't say anything you don't mean. This counsel is embedded deep in our traditions. You only make things worse when you lay down a smokescreen of pious talk, saying, I'll pray for you, and never doing it. Or saying, God be with you, and not really meaning it. You don't make your words true by embellishing them with religious lace. In making your speech sound more religious, it becomes less true. Just say yes or no. When you manipulate words to get your own way, that's when you go wrong. So, the purpose of this devotion is to encourage you to be the man or woman who says what he means. In the United States, incoming presidents often take the oath of office by placing their left hand on a Bible while swearing to uphold the Constitution. George Washington began the practice on April 30th, 1789, and presidents have continued it into modern times. According to the New York Contributor, Hannah Rosefield, who is very far left to the center, the use of oath books in a legal setting dates back to 9th century England, when certain transactions were conducted at the altar with participants swearing on a gospel book. A few centuries later, English courts adopted the practice. Rosefield writes, by placing a hand on the book and then kissing it, the oath taker is acknowledging that should he or she lie under oath, neither the words in the Bible, nor their good deeds, nor their prayers will bring them any earthly or spiritual profit. In time, this became standard legal procedure. All witnesses swearing to tell the truth, the whole truth, and nothing but the truth. And it has made its way into American courts. British witnesses today still take their oaths by Almighty God. American oath takers conclude theirs with, "So help me God." We might be tempted to affirm the practice of swearing our truthfulness by the Bible or by invoking God's name, but doing so isn't biblical. In Matthew 5, Jesus prohibits taking oaths. He wants his followers to have such integrity that their truthfulness is never called into question. A truly faithful man or woman says what they mean and they keep their word. When your integrity is intact, the words will be believable. The next time you feel tempted to swear something is true, remember how trustworthy most politicians are, and ask yourself if the oath will boost your credibility. Remember, the things that you say, for the most part, whoever you're speaking to, whether it's one person or a stadium filled with people, goes in one ear and out the other. What people are really watching is how you live your life. Do you just talk the talk, or do you walk the talk? Ask yourself this question. Do you ever say things like, "No, really, I'm telling the truth"? You might want to think of some better ways to convince people, and that would be by how they see you live your life. Join me in a word of prayer. Heavenly Father, we come before you today with hearts seeking truth and integrity. Your word reminds us in Matthew 5 to let our yes be yes and our no be no. Help us, Lord, to be people of honesty, keeping our promises and speaking with sincerity. May our words and actions align with your truth, and may we reflect your character in all that we do. Guide us to live with integrity, trusting that you see our hearts and you alone know our intentions. May we honor you in both our speech and our commitments. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Friday. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow up 53 points, the NASDAQ up 34, the S&P 500 up 7, and the Russell 2000, our man in the street, up just 2. I suspect by the end of this broadcast, we could see some red in these indices. And you'll understand when we go to the charts. In the commodity basket, crude oil is down $1.19, trading 76.97 the last. That's a drop of 1.5%. Gold up $39.70, trading 25.32 last. That's a gain of over 1.5%. Silver up a dime, trading 28.52 last. In the Asian markets at the close, the Nikkei posted a gain of 1,336 points. That's a gain of well over 3.5%. Shanghai rose just 2 points, but the Hang Seng gained 321, which is almost 2%. And in the European markets at the close, FTSE down 35, the DAX up 139, the CAC up 26. So we had a green day in Asia. It was a mixed day for the UK. And at the moment, it's a green Radio Friday here in the US of A. But again, I suspect by the end of this broadcast, an hour and a half, 2 hours from now, there may be a little red in there. But we'll see. Time will tell. So today is the big speech from Kamala Harris about her economic plan. So far, she's taught us how to make white dude tacos. I'm sure you saw that video from yesterday. Now, again, she's taken no questions from reporters, done no real press conference. There's been just these scripted vignettes where she got a phone call from Barack Obama on speakerphone, and the cameras just happened to be there. And when she called Twisted Tim to invite him to be her vice president, again, we were on speakerphone and the cameras just happened to be there. Probably just a coincidence, right? Well, today, Harris will lay out her plans for the U.S. economy in a speech focused on everything from housing costs to grocery store prices. Now, these housing costs are important because of the economic data we got this morning. This will be the Democratic nominee's first extended foray into economic policy since announcing her run for the presidency. The plan will address some of the sharpest pain points American families are confronting and bolster their financial security. Now, that's from her campaign in a prepared statement. This speech will take place at 2:45 p.m. Eastern in Raleigh, North Carolina, and will likely highlight a critical view of corporate mergers, signal new efforts to drive down healthcare costs, which is also called Medicare for All, even those who are in our country illegally, and while some may call that socialism, it's starting to look a whole lot more like Marxism and communism. But we'll see. She's also expected to unveil a push to expand the child tax credit to $6,000 for the first year of a child's life. Now that's a big number, $6,000, but the subtext is it's for 1 year. What happens after that? Now, her plan also includes a new first-time homebuyer credit of $25,000. Where's that money going to come from? Is the Fed going to just print it? Okay, of course they are. But then how does the Fed get paid back? Well, that would be your tax dollars. And mine. The speech is an attempt by the campaign to keep its political momentum going. The happy dance. With a focus on kitchen table issues and everyday cost, after Harris has moved into a seeming tie with former President Donald Trump ahead of next week's Democratic National Convention in Chicago. But the plan also has some very early critics. It's also likely to still leave key areas of the potential Harris economic agenda largely undefined on a series of issues, ranging from key tax issues to manufacturing policy to the ballooning national debt, which a couple weeks ago hit $35 trillion. That's probably more than you or I will make in our lifetime. I'm guessing. Here's what this week's high-profile rollout tells us so far about Harris's economic plans and what still remains to be sketched out in the weeks ahead, which I think's kind of sketchy. Plan released Friday includes several efforts aimed at the housing market, a source of stubborn price pressures even as overall inflation cools. But is it really? Have you noticed it at the gas pump? Have you noticed it at the grocery store? Now the economic reports say we're getting closer to that 2% the Fed needs in order to cut rates in September. Stickiness of housing cost increases is still largely attributed to a low supply of housing stock. To combat that issue, the Vice President announced a plan for a series of proposed tax breaks that her campaign said could result in the construction of 3 million housing units in the coming 4 years. On the supply side of the equation, the plan includes a proposal for what the campaign is calling a first ever tax incentive for building starter homes. This is a credit that would go to home builders who build homes that are eventually sold to first-time homebuyers. The plan also proposes a new $40 billion innovation fund that would focus on local governments and their rental markets. I assume that she will also talk about her plan to control prices. I know many of you are old enough to remember when we tried that here in America back in the 70s. Lines at the gas, if you wanted to get gas, you had to get up at 4 in the morning to go get in line and wait for hours just to get some gas. In the grocery stores, shelves were empty. Every country that has ever tried socialism, Marxism, and communism have all ended up in the same place. And that's where the Democratic nominee is pointing America. But I don't guess that comes as any surprise. Now, we had a huge miss on one of the economic reports today. U.S. single-family home building dropped to nearly a 1.5-year low in July. I love this part, due in part to Hurricane Beryl's disruption of activity. But rising new housing supply could limit a rebound. The 5th straight monthly decline in home building, reported by the Commerce Department on Friday, suggested the housing market remained depressed at the start of the third quarter. Aside from the weather, the housing market remains constrained by higher mortgage rates and house prices. Even though lower interest rates should provide ongoing support to new home sales, the existing oversupply in some regional markets could be a bigger constraint than previously anticipated. Single-family housing starts, which account for the bulk of home building, tumbled 14.1% to a seasonally adjusted annual rate of 851,000 units last month, the lowest level since March of 2023. Single-family home building plunged 22.9% in the densely populated South. And again, the pundits are saying, well, that's just because of Beryl, which struck Texas early in the month. Housing starts also plummeted 21.7% in the Northeast. They slipped 1.4% in the West, but there was an actual increase in the Midwest by 16.8%. Single-family housing starts dropped 14.8% on a year-on-year basis in July. The housing market has weakened following a spring resurgence in mortgage rates. Residential investment, which includes home building, contracted in the second quarter after rising for 3 consecutive quarters. Part of her plan is, of course, rent control. And if you ask anyone in New York City who lives in a rent control building, things usually aren't pretty. When you impose these types of regulatory controls, now Kroger, as an example, they have a profit margin of 1.4%. Apple, on the other hand, has a profit margin of 24%. According to chief economist at FWD Bonds, residential housing construction will not be contributing anything to this quarter's real GDP growth. So let's talk about the new normal for America. Economists and investors have been on consumer slump watch over the past couple of months. Warning signs included a slump in retail sales in June, and Amazon's CFO flagging cautious consumers. Analysts were bracing for a tough round of retail earnings after a slump in Home Depot's comparable sales. They may be feeling a little better after Thursday. Retail sales in July, I love this term, roared back by 1%. Even though much of the gain came from vehicle and gas station sales. So it's not that Americans were buying more, they were simply having to pay higher prices. The actual units sold, which is not in the report, fell. Does it get ugly before it gets better? Probably. U.S. investors cut their equity fund holdings and boosted safer positions in the 7 days leading up to August 14th, amid persistent concerns over an economic slowdown and recent market volatility. And that's something we've seen a lot of the last couple weeks, is a whole lot of volatility. Investors withdrew a net $8.92 billion from U.S. equity funds, in the largest weekly sell-off since June 12th, while channeling $16.1 billion and $3.35 billion into money market and government bond funds. In mind, they're betting on a September rate cut. And I think the Fed is going to be pressured into doing it. But is it going to make a difference? Fund investors remained risk-averse amid recent turbulence in risk assets, though benign U.S. inflation data and strong July retail sales. Again, they didn't sell more stuff, they just sold stuff at a higher price. Has buoyed stocks this week. Are we looking at one of the biggest dead cat bounces in history? I don't have crystal balls, but it's possible. From Bloomberg, oil tumbled at the end of a turbulent week. Traders continuing to weigh the impact of a slowdown in China against a possible attack by Iran or proxies on Israel. West Texas Intermediate traded close to $76 a barrel, erasing its gain for the week. Oil prices have been choppy in the depths of summer trading, roiled by the tumult in wider markets, bumper swings in algorithmic positioning, and geopolitical risk in the Mideast. Crude extended declines after the White House said talks about a potential Gaza ceasefire agreement have been serious and constructive. Now, to use the White House and serious in the same sentence at this point in time seems a little ridiculous. And more from Bloomberg, a rally that put stocks on track for the best week in 2024 lost steam today, with traders assessing the latest economic data for clues on the outlook for the Fed's reserve policy. After a 6-day rally, the S&P 500 fluctuated amid a consolidation of those gains, just a week ahead of Jerome Powell's speech in Jackson Hole, Wyoming. Wall Street paused to evaluate a raft of data that, on balance, signaled the Fed won't need to deploy aggressive easing as the economy isn't falling off a cliff. I guess that depends on which cliff you're next to. That view has led traders to pare back their bets on jumbo rate cuts this week, while the market is still gearing up for a reduction in September. China. According to Reuters, several Chinese banks have been given new gold import quotas from the central bank, anticipating revived demand despite record high prices. The new quotas aimed at helping the People's Bank of China control how much bullion enters the world's leading consumer of the precious metal were granted in August after a 2-month pause, largely due to slower physical demand in the wake of a bullish market. Spot gold has gained 21% so far this year, having hit successive record highs, striking a peak of $2,500.99 per ounce today as the dollar weakened and markets increasingly see U.S. monetary easing on the horizon in September. Strong Chinese buying was a key factor in bullion's March-April rally, and if demand picks up again, it further boost prices, according to analysts. Quotas have been issued, but the local premium to offshore is low. So there's no guarantee that the quotas will be used until things improve. Jewelry demand is still weak, but investment demand is healthy. People's Bank of China did not respond to Reuters' request for a comment. China has a history of curtailing gold import quotas for several months. While the yuan, their currency, is weak against the dollar. However, this year's pause was led by the banks themselves amid muted demand. And finally, a surge in optimism by Democrats over the prospects of Vice President Kamala Harris has lifted U.S. consumer sentiment slightly this month. The University of Michigan's consumer sentiment edged up to 67.8 after coming in at 66.4 in July. Americans' expectations for the future rose, while their assessment of current economic conditions sank slightly. I saw a poll of Democratic and Independent voters who voted for President Biden in the last election. And it was a very interesting poll because it asked these voters, were you aware of this, and this, and this, and this? There's a list of probably, 15 to 20 questions. And 80% or more of most of the respondents said, no, I wasn't aware of that. Just like most Americans were not aware of Joe Biden's mental decline until we saw him on stage, President Trump at the debate, and then everybody in America saw it and reacted to it. So now we have a presidential nominee that in her last run for president failed to gain even one electoral vote. Many Democrats pushed for some kind of mini primary to take a look at who there was in the Democratic field to put into the slot. But President Biden said, hey, I endorse Kamala, so there it is. It's like going to the Super Bowl without ever having won a single game. Incredible. That's the news fit to read. Let's take a look at Logic 247. We are in week 315. Over the last 315 weeks, we've issued over 17,600 individual handcrafted alerts. Now, this recap was valid as of 7 a.m. Eastern this morning. Valerie will update it for the week this afternoon. But at the time of the recap this morning, since the markets opened Sunday night, we issued a total of 65 alerts. Last week, we issued over 80 based on market conditions. 3 never triggered. At 7 a.m., we were still waiting on the outcome of 18. It gave us 44 actionable alerts, of which 11, or 25%, would have been stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Over the last 315 weeks and over 17,000 alerts, we've averaged on a weekly basis 20% or less of the alerts being stopped out. Last week we had over 80 alerts total, and we finished the week with 6% stopped out. This is the truth about trading. We don't sweep the bad days, the bad trades, or the bad weeks under the carpet because they are the truth. If you start sweeping stuff under the carpet, you're going to trip yourself up pretty quick. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. as opportunity presents. Futures trade around the clock. We have traders around the globe. But we have another alert service. In fact, it was our original alert service, the concierge trade alerts. They're a little bit different in several different ways. The logic alerts give you an entry price, an initial target, additional targets, and a final trade to target. The purpose of those logic alerts is not so that you can just trade the alerts and not have to worry about learning how to trade. They're actually a tool to help you learn how to read the charts, because until you can read the chart, you can't learn how to trade. Use the logic alerts as intended. Then you'll be ready for the CTAs, the concierge trade alerts. Unlike the logic alerts, they don't come out around the clock. They're posted as a static report shortly after the Globex open each evening. So the Friday session began last night at 6 p.m. Eastern. At 6:25, all of our members and trial members had every one of these targets. The first thing you do when this report is published is go to the 30-minute chart of whatever markets you actually trade. Make note of where price is at the time the report is published. It'll always be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. That part's pretty simple. The BBC stands for Bull Bear Cross. When price is above the green line you see on my charts, we're bullish and anticipate higher prices. Price gets below the green line, we're bearish and anticipate lower prices. Again, that part's pretty simple. Now, markets are fractal in nature, so while the 30-minute chart is used for the purpose of the logic and concierge trade alerts, you can apply the BBC to any market, any time frame. Daily, weekly, monthly, 5-minute tick chart, range chart. Wherever you apply it, it functions the same. Price gets above the green line, look for higher prices. Price gets below the green line for lower prices, always relative to whatever time frame you apply it to. Now, this is where you find out if you learned what you were supposed to learn with the logic alerts. Because this is where you get to look left and spot your entry point, your initial target, and your additional targets. And by now you should understand how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the 30-minute BBC, it's trying to get to the weekly zone above. Price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones every week for our members and trial members since December 14th of 2009. We're closing in on 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Just resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, Michael will be with us here in a few minutes, give us a recap of what happened in the live training room this morning. This is the S&P 500 daily chart. You might think, hey, I don't trade a daily chart. Most people don't, except institutional traders. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has to do with account size. Institutional traders have accounts in the hundreds of millions, billions, even trillions of dollars. And the size they trade in is what actually moves price. You and I simply serve as liquidity. Our strategy and indicators are not designed to outsmart the institutions with their infinite resources, but to help us clearly see what they're doing, why they're doing it. Because if you simply do what they're doing long enough to get your goal for the day, and then have the discipline to put the mouse away, trading still won't be easy, but it can be simple. Now today we have a small range day compared to yesterday. This is the Friday candle, Thursday. We had a small range day on Wednesday, huge range on Tuesday. Tuesday we went from the 50% retracement all the way up to the 38. And that's important because we closed above the BBC. We ran an uptrend most of the year, leg and a retracement, leg and a retracement, leg and a retracement, a leg. When price could go no higher, we began a downtrend, or what appeared to be a downtrend. Got a leg and a retracement. Now notice that the pullback to the BBC, whether you pull from below or above, pullback holds more often than not. So we got a leg, closed below the BBC, right at the 24% fib retracement. That bounced us up to the 38% fib extension. Then we got another leg down to the 38% fib retracement, which held as support for 5 out of 6 trading sessions. Then came the big sell-off. Now we spiked the previous bullish cross, but that move was very short-lived. Price spent most of that day sitting right on top of this line that I've drawn across here. And it served not only as support for most of this day, but for the next 3 trading sessions. Now here comes the surprise. Leg retracement, leg retracement, leg retracement. And here is where we would anticipate another leg to the downside. Didn't get it, because everybody's doing the happy dance. So where are we now? We've come all the way up to the 24% fib extension. Got potential resistance overhead right here. At this high, 5,603/4, right there. And then just above that is the 38% fib extension. And then above that, you've got this high at 5629.75. So the question is, do we take out this retracement high? Leg retrace, leg retrace. If we close above this high, then we're no longer in a downtrend. Then we have to look at it this way. Leg, retracement, leg. Potentially leading to new all-time historic highs. The current all-time historic high, 57.21 1/4. So price has been struggling all day to get above this 24% fib extension. It is slightly above it. It's been above it. We're just off the high of the session. We're well off the low of the session. We've got blue and climbing below us. Should something happen, if this turns out to be a dead cat bounce, make sure you're aware of where you've got potential support. Right here, you've got potential support at the lowest fib extension and the daily step line. Below that, you've got the 38% fib retracement and the daily BBC. Below that, you've got potential support at blue and climbing and the 50% fib retracement. And if we take that out, it's another trip back to the 62, and then back down to this area of the bullish cross, and then this area where we spiked the bullish cross. I encourage you to learn to spend whatever you trade, whether it's futures or stocks or crypto or Forex or ETFs, learn to spend 2 minutes with the daily chart before you begin your daily trading session. Look over the shoulder of the deep pockets who move price and see what they're doing. Some days it can be quite obvious. Other days like today, less obvious. But there's no doubt that the market is trying to reach this retracement high right here at 5,603 quarters. When I come back, we will pick up with a recap of all the concierge trade alerts. Right now, Michael's going to give us a recap of everything that happened this morning in the live training room. Then we'll go live on TradingView for 30 minutes. And after that, I'll be back. We'll recap each one of the CTAs that were published last night. And we'll wrap the week up with our good word for the day.
All right. So I can see that the market's moved up and not down.
Yep.
What I was saying at the end of the session this morning, where the things that were tentative were, I believe, the things that were looking bullish were the ES and the let's go look again. What did I say this morning? The things that were looking bullish at the end of the morning session. The Russell had a doji right here. That was questionable. The YM was
the potential for this to become a dead cat bounce is, I think, still very realistic.
It is.
Unless
it is very much.
We can take out that previous retracement high and start building more legs to the upside. I'm still.
Yeah, the bigger picture is not as clear as you'd like it to be.
Got a big question mark hanging over my head and the charts we're looking at.
Yep.
So I'll turn it over to you. We can see your charts. Everything looks good.
Okay, here we go. Let's get started then. Good afternoon, everyone. Today is Friday, the 16th day of August, 2024. Now, if you have not taken a free trial with us, if you've not taken a free trial with us, go here to mytradingaq.com. Right here on the purple button, click on that. There is no credit card required for this trial. Click on that, and you will be sent to this page right here. This page actually is not the one you're going to be sent to. This is the page you're going to be sent to. Oops, sorry, not there. I'm going to go do it again. I had to refresh that page. Okay, hang on. I got to go back and refresh this page because I know I did this. There we go. This is the page you're going to be sent to. Here it is. Where all you have to do is fill out this form, right? We ask for your first name, your last name, your email, your phone number, 5 multiple choice questions, and right here, if you have a NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. Hit that register button. Once you hit the register button, you will be sent to a confirmation link. You will not be sent to confirmation. You will be sent all the information that you need to get into the room in the morning. God, I don't know why. Every now and then I flip back to stuff that's like 6 years old in my mind. But it was ingrained in there for about 10 years. When you click that link, you'll be sent all the information you need to get into the room in the morning, and we will be sent all the information to enable your indicators for you. All right, that's all you have to do to take the free trial. Go here, mytradingiq.com, click on the purple button, no credit card required, and that's going to get you all the information you need to give us all the information we need to get your indicators going and to get you into the room in the morning. Now, we had a pretty good day today. If you can read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 16th day of August 2024. We made 80 ticks on the NQ, 56 ticks on the Russell, 24 ticks on the YM, and 19 ticks on the ES. That put us at $1,037.50. Today took 3 minutes and 1 trade to get to the goal for the day. At that point, we're up $4,750. That was a big trade on the ES. And we took a total of 19 trades this morning. So on the month now, we're at $7,655 over 12 business days, averaging $637 per contract per 2-hour business day. Now, where we are in the month, we are on target to have our best month of the year. All right, we only have to beat 10,867. We have a full 2 weeks left, don't we? Yes, a full 2 weeks to make just a meager $3,000. $3,500 would do it. We should be able to do that with 20 contracts. We could do that in a day, but with one contract, I don't know. With 20 contracts, we can do it in a day, though. Anyway, that said, if you on the year at 65,607, averaging 428 per contract per 2-hour trading day. Following the 24/20 blueprint, if you started with one contract this year and you added one contract a month, doing everything just like we did in the room, you would have had to work 48.25 hours so far this year, and you would have averaged $1,857 per hour for those 48.25 hours. If you did it like me and started January of last year, you're on your 20th contract right now, the last month of the 24/20 blueprint. And same 48.25 hours, but $7,252 per hour, because I'm on 20 contracts and not 8, right? Big difference, and it should be. Let's get into the trades, all right? We had some really good indications this morning, and we had some, well, let's just say we had some really good indications. We'll just leave it at that. On the YM, we're on the larger time frame again right here. Our first trade on the YM was right here, and we picked up 10 ticks on that first one, 5 more on the second one that put us at plus 15. Then we stopped out. That was minus 25. That put us at minus 10. Then we picked up 24 right there to get us to plus 14. And then it looks like 11. I don't think it was 11. I think it was 10 on this one to get us to plus 24. I think it should be a 24. 25. I think I got it right in the spreadsheet, right? Yeah, I did 24 over here. I picked up 10 there to get us to 24. And that was where we stopped trading. Now, during the break, I've been telling you that these black arrows are going to be more meaningful. And those of you guys that were in the partners meeting last night, this down here is going to become more meaningful as well. And if you couple that with the black arrow, that makes it even better. You'll see all that as we progress here, moving into the month of September. Okay. So during the break, we had 3 black arrows there, every one which was profitable. We took all these trades right here. This last one right here, I got 10 ticks in profit on. That was the very last one of the day, and I needed that to get over $1,000 a contract. And that was it for the YM. Okay. Now on the Russell, we had some pretty good indications here on the Russell today too. We were able to use the diamond principle and figure out exactly when and where price was going to get to a place. If it were going to exceed the prior swing low and continue with that trend, this is where that should have gone. But it didn't continue the trend. So you have to flip the whole thing around. And then that one, if we were to do the diamond principle on this, those of you guys in the know would see right there is where it should go, right? Right. You guys that are following me with the whole diamond principle thing, you can see that that is where it should go. Great. Hang on, let me see what's on my phone. Okay, I just got these alerts popping up over here on my phone, and that doesn't matter. Let me quickly go over that for you. All right, time is it's 1 o'clock. Let me just quickly go over this for you. This is your time element. This is your price element. What is the speed thing for that? Alt T. Okay, so from here, this is how long it should have taken. Right there's how long it should have taken to get up to there. And you see it just about nailed it right there, but you see it did eventually end up finishing it. But that's the diamond principle. Okay. And this one here worked out really well, but let's get back into the trades that we actually did do. On the Russell, we had a break even there, we had a break even there. Time principle worked, time principle worked. We had a short trade in here, 6 ticks profit on the first one, 20 ticks profit on the second one, and then 30 ticks profit on this one right here. Those were the trades we took on the Russell this morning. Okay. If you're in here and you're a partner and you did not see the partners meeting last night, you should go back and check it out. Okay. From some point, probably like, I think I got into the meat of the stuff around 10 o'clock last night. Okay, I'm not exactly sure where, but somewhere in there. Not 10 o'clock, 9 o'clock, sorry. All right, so the ES we had, this was our first trade of the day on the ES. We took it in the no trade zone, but it was a purple arrow from the no trade zone right here. And it was giving us good indications up here on the DOM, reading the DOM from yesterday's lesson plan. It was giving us good indications from here. So we took the shot right there with the purple arrow right at the open. It was actually a little before the open. And so on that first trade, we ended up getting 19 ticks on the ES. And that was our one ES trade. We didn't trade again the rest of the morning. We were looking over here using the diamond principle to get it down to here. It took a little bit longer to get there, but it did get there. And then we looked for more opportunities and we didn't get any. Now, those of you guys in the know, based on how quickly this came down, how quickly it should go back up, and how far down it went, and if it does actually bounce right here, it's 86 1/4 down to, we'll just say down to the ribbon, okay, down to, let's say 80 1/4, so it's 6 points from the bottom of this. So from here, 6 points up would be 92.50 roughly, and this time span. So this could happen while I'm still doing this right now. Should be right here. In about, times at 102, in about 13 minutes. Okay. That was it on the ES. We didn't have any other trades other than that one. We got the 19 ticks on this morning. Okay. Now on the NQ, we did trade the NQ some today. It was just giving us opportunities, so we just went with the opportunity. It was Friday, so I figured I had more time today to do trading and to get back anything that I stopped out on the NQ. And then, you know, that it's what is my stop on that? Isn't it like 48 ticks or something like that? Yeah, 48 ticks. I have a 48 tick stop on the NQ, and I had one of those today. It takes a little while to recover from that. But I'm sorry, I had a 36 tick stop. I did that backwards. I said that backwards again. I had a 36 tick stop. Either way, it takes a long time to recover from that. I didn't have any 48 tick trades today, I don't think. Oh, I had one 48 tick trade today. Anyway, right here on the very first trade right here, we picked up on the NQ 24 ticks there. And then we had a break even and another break even. And the direction change. And then here we picked up, went from 24 to 72. So I guess that was a 48 tick trade right there, 24 to 72. Now the next one went from 72 to 78. So we had a 4 tick gain there. Then, I'm sorry, 76. And then on the next one that we took, where it is, this isn't it. We had another one in here that was a good trade where we went from 76 to 108. So that was a 32 tick trade. And then we stopped out and we lost the 36 ticks there. That put us back down to 80. And that is where we ended it. Oh, nope, I have one more right here that I did not log. I did not log this one in right here. Oh wait, maybe I did. Went from 108 down to 72, and then from 72 to 80. So this was where we stopped out, and this is where we got the other. Yeah, I did log it. Okay, so that's where we went to 80. And during the break, you can see in here that there were some great opportunities. And those of you guys that were watching in the lesson plan last night, or in the meeting last night, you will see there were some other reasons to look at trades through here. Other reasons to look at trades through here when the ribbon is spread and you're getting certain indications in here. should have more comfort in taking some of these trades. One right here, as a matter of fact, on the NQ right now. All right, and that was it. On the NQ, we ended up with plus 80. Plus 80 is how we ended up the morning session. Okay, so let me minimize this, and we'll come back here. And do this and this. All right. So for those of you who are watching right now, somewhere in the near future, this is what it could look like. Right? You want to get in, you want to get connected, you want to start taking advantage of the things that we're teaching you in here. Well, you can. All right. This is what it looks like now. All right. So we'll get into the trading here. For anybody that's watching in the live stream right now, it's 1:06. If you just started watching the live stream, the YouTube stream, then you haven't taken a free trial, go ahead to mytradingiq.com. Click on the purple button right here. There's no credit card required for this trial. Click on that. It's going to bring you to this registration page. Just fill out this form right here, and we'll get you registered. Okay, we'll get you going, and you get all the information you need to get into the room in the morning. All right, that is where we want you to be. Now, let's just keep moving forward here. We'll look for trade setups here. We don't have any actually setting up. There's one here on the YM, based on what we said last night. There's one here on the YM that's triggering. There's almost one here on the Russell, but not quite. This bar needs to close down, be the next up close. There's one here on the ES that already triggered. It was from right in here. And there's one over here on the NQ that actually triggered a few minutes ago right in there. It should run up from here, but the bands are starting to compress in here, so that's not the greatest opportunity. You want to see the bands. You want to be able to see the whole ribbon in there. Okay, they can do over here on the YM right now, and they can do over here on the Russell right now, and they can do over here on the ES right now. Okay, that's what you want to see. All right. Let's look at other stuff. While we are in here, let's go out here. And this is our Bitcoin. And what is Bitcoin on a 7 range? Yeah, that's not going to work. Let's put Bitcoin on a 30-minute. That's not going to work either. At 1 minute, that's not going to work. I'm going to go to a daily on the Bitcoin. That's what I'm trying to do. Daily on the Bitcoin. There we go. All right, so the Bitcoin right now is an inside bar, mixed up inside bar right here. Is what's going on with that. Let's go out one more tomorrow and see if that finished recovering. It did not. It did not. Okay, and this again is on the 7 range. We'll go back to a daily on this. And maybe it was a 30-minute we were looking at. It must have been a 30-minute we were looking at here. Yeah, it was a 30-minute. Okay, because since it had that gap down right here, had this gap down. No, not that gap down. This gap down right over here. This gap down right here. It has not recovered that full gap down yet. It seems like it's trying to. Right now you can see we have higher lows and lower highs again. We're in a triangle again. Every time we get into a triangle, you have the potential for it to break out one way or the other. The last one, the first one broke out to the downside. The next one broke out to the upside. The next one broke out to the downside. So it really can't decide which way it's going to go. Now I know this gap here usually gets filled with equities, but it doesn't have to be filled, not for a long time. But you know, there's some people that are in that gap, that are holding in that gap. So I don't know who those people are, but they must have some pretty deep pockets to be holding it still, if they are. The ZB, this was something I was looking at, and I kept trying to jump back to this. I don't think Matthew's in here today, but this is something I was looking at with Matthew, based upon basically the same information we were looking at last night. It's a ZB on a 3 range. The ZB is 31.25 a tick. 31.25 a tick. I'm pretty sure that's what it is. So to get the goal for the day, you only need a few ticks. Now you might want to adjust your goal so that it's like $92. But to get the goal for the day, you only need a few ticks on this. And you can see that well, today is right in here on the 3-tick range today. The only entry would have been this up close right here. Would have been the entry right there, and it gave 2309, ran up to 2405, so it gave 6 ticks. Right, I think. Is that right? The entry would have been right here, 2309, 07, 2310, we'll say. That's 11, 12, 13, 14, 15. No, actually, it's a lot more than that. What is this on? It's a 3 range. It should be 3 ticks. All right. Well, anyway, it is a 3 tick. And it gave from right here. Oh, I know what it is. It's 23.1 up to 24. That's like 4 ticks right there is what it gave. But the opportunity was there. It's really, really painfully slow, but it trades really thick. It's really liquid. So you can trade 50 contracts, 100 contracts easy with this one if you wanted to. Just point that out. Now back here in this little world, we have a green arrow right here off the ribbon. That is a valid long trade there on the NQ. And well, I didn't get it in time. I'm trying to get filled. I don't think it's too late. 850 up to 125. It's 80.50. No, I can still take it. There, I just filled. Okay, I just filled, so now I'm long. No, this is the ES. I thought it was the NQ. Okay, well, either way. And I took it on the NQ. I'm totally losing it right now. Okay, so here is the ES. Now the NQ, I just locked in 4 ticks in profit. I can't even see what the NQ is doing, but I'm hoping it's going with the ES. The ES, I could still take a trade here. 80.50. It only went up to 81.25. It hasn't gone 4 ticks into profit yet, so you can still take a trade there on that one. And the NQ, let's see if that was actually a trade in here. There's a trade back here on the NQ. I'm still in that one that I accidentally just took, and I have 4 ticks in profit. Actually 5. 8. No, 8. That was an accident. Here's the ES that I didn't mean to take. All right, now, actually, this is a mistake too. I'm going to throw my stop at break even. I'm losing my mind here. I'm going to throw my stop at break even on this. This is a mistake too because the entry should have been from here. I was looking at the green arrow and not looking at the blue arrow. The blue arrow had to put in a higher swing before you take anything else in that direction, and it did not. So I'm in it. My stop's at break even. I'm going to lock in 1 tick. That was a mistake too. All right, so let's try to do something without making a mistake. And I was just looking at the NQ telling you about the ES. The ES I did do right. Oh, I'm going to lose it. Yeah. I went to a lot of exercise during the break. I think my brain's a little mushy right now. Anyway, let's just go here like this. We'll just go back to 3. This is the ES. This is the Russell. This is the YM. We need we need to get a higher swing over here. So that trade there was a valid trade. I got 1 tick profit on it. We don't have anything here on the Russell right now, but there's an argument for taking a trade right there where it is. Based on everything that I said last night and showed you guys last night, there's an argument for taking a trade right there. Not on the YM, but on the Russell there is. Okay. And Jeff G, are you in here? It does not look like he's in here. Okay. Send him that link. Okay, that was not the link. This is the link. All right. Waiting. So you see how this is dragging out? So this is not in the right place anymore. This got a little deeper and it stretched out. So this is possibly going to be over here like that. We got to wait and see. If this does not put in a higher swing, then this means nothing. This has to put in the higher swing for that to become something. All right. Any questions? Does anybody have any questions? Time's at 1:15, so we have 15 minutes left in this session. All right. See, the ribbon got all crunched up in here. It was this right over here. I went some to get the stop to break even. This right here, wasn't enough to get the goal. This right here, wasn't enough to get the goal. This right here, wasn't enough to get the goal. Goal. Ribbon's all crunched up. Goal if you took it. Ribbon's crunched up in there. Either one of those would still been goal. This one, goal. This one, goal. Good stuff, guys. Good stuff coming your way in the near future. Nobody's got any questions about it all?
Nothing on YouTube.
Nope. Okay, good. All right. We're waiting. Waiting. Yeah, this Russell that's still working itself out right here. The black arrow right now, it's working itself out. It hasn't, I guess if you count this right here, it hit the ribbon after the change, but it wasn't really after the change, it was in the middle of the direction change. Now, using what you were shown last night, the long trade would have been from right here, right there. Okay. Right there. So we're waiting. The green arrow over here, I totally messed all this stuff up between the NQ and the ES. This green arrow here, I took the 1 tick profit on that, and it needs to get up above this level right here, and then we'll have the time element associated. Okay, we have the price element right now, but we don't have the time. Alt T, let me just do that. Alt T. Nope, that didn't work. It's right here. Alt T. I gotta hold it. Alt T. Oh yeah, I guess I do have to hold it. Okay. This is what Alt E did. That right there. So that's the price element. So that's going to get you up here to the price element. And the time still hasn't happened. You still can't figure out the time part of the time principle yet. Let's look at anything else that might be moving. Come look at the NQ here again. See if you have anything going there. Don't. Smart Bitcoin. I don't know, guys. 9 more minutes of quiet. This is what happens when you go to a larger time frame. Even on the smaller time frame right now, it's in a no trade zone there. It would be a no trade zone anyway with the way these sensitivities set, but it's a no trade zone there. And smaller time frame here might be giving you a long trade. It's going to be a no trade zone, but yeah, see, it wouldn't be anything there either. Over here, if you drop this down to a 15 range, you got nothing there either. And these have kept it a 7 range the whole time. So quiet day. We had a good, nice, a good active morning. And got up to 1,037 on that last 10 tick trade on the YM. It was over $1,000. We were 1 ES tick away from being $1,000. Still not our best day of the month, but it is a good day. I think it's better than any day last month, isn't it? No, it's not. Better than any day in June. March. February. February was our last non-green day. It was in February 26th. And that was Jake's fault. Blame that one on Jake. That was a Monday. Because 2 days before that, he drove off a cliff. Driven off a cliff. His friend has a new car, by the way. Noah. He's got a Dodge Challenger, something like that. I know he was over here last night changing the brakes on it. Actually, he didn't change the brakes. He took all the wheels off and checked the brakes. He bought all the parts, but he didn't use them because he said the brakes were fine. Interesting. All right, so on the Russell, it is moving up. This down here and the black arrow both indicated it should move up, and it is moving up slowly. Okay, I don't have to use that stuff. I can hit the break even button. I have plenty of time. So where should it go? It should go up here to 2155.4. Where's my target? 2155.4. Look at that. How is that for symmetry? The target ended up at 2155.4. And it just happens to be 45 ticks, exactly 45 ticks from the entry point. Okay. So we're waiting it out. So I guess I'm gonna have to do some analysis in here. BB1, BB2, BB3. And right here, the ribbon in this bar and this bar. The ribbon goes from 635.71 down to 636.17. So the ribbon actually went up from this bar to this bar. If you look at the numbers over here, 635.71 to 636.17. And the BB1 went from 635.14 to 635.65. And BB2, 633 to 633.9, and the BB3, 630.6 to 631.71. So all these, even though it looks like they are going down from this bar to this bar, they all actually went up a little bit. Sorry, I'm just looking at the ribbon and what the ribbon is doing, how the ribbon's reacting based on other indications that suggest you should be doing things. Like in this one right here, everything went up, right? I think I've got the ribbon coded so that everything stays blue as long as it keeps going up, and then it changes to red if it goes down. So like right in here where everything turned blue a little bit in there. I mean, everything started to go up right there. Interesting. I guess I do already have it coded that way. Right in here where some of them turn to red, right in there inside the ribbon. Do you see that? So some of them turned down. Some of them were lower, less. Okay, I'm out of break even on this Russell trade. And yes, there's a little bit more math that needs to go into this. Interesting stuff. Oh yeah, I guess you did. Wow, I was talking this whole time. Okay, what I was saying was we put this trade here on the YM and we have a 25 tick stop on it. 25 tick stop would put you right down here in the middle of the ribbon. And if you were to add 45 ticks, which is what the target is, that's exactly up here at the price swing high. I'm going to have to wrap it up because I got another meeting coming up here. But we do have a long trade going on here right now with the YM, and it should make it up here to the prior swing high. That's what you'd expect out of the trade. All right, we never did get to finish the diamond development here because we never got up to the prior swing high, which would establish the time element of it. All right, so this price-wise is in the right place, but time-wise it could be all the way over here for all we know. So we have to wait. We have to wait until it gets through right here. Once price gets up above there, then you have your time element. It'd be from here to wherever it goes up above there. Then you duplicate that on this side, and that's what it should take to get up to here. All right. So the price element is already in place. The time element is the only thing that's not. And with that, I'm going to wrap it up and pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep. Recap of the morning session.
Today it took 3 minutes and one trade to get to $4,750.
Great way to end the week.
It is indeed. Thank you. Thank you.
All right, guys. We'll pick up where we left off. We were just getting into the CTA recaps. We already covered the daily chart. We know where our next major resistance is, and that was at this pullback high. This is where we'll find out if we have a dead cat bounce or the real deal. A close above 5,603/4 will then put us up against potential resistance at the 38% fib extension and the high of July 23rd, 50%, then the 62. And then we're at the all-time historic high, which came in July 16th at 57.21 So all the alerts, logic, and concierge are created on the 30-minute chart. Nothing magical about 30 minutes. Simply the time frame I chose years ago. And if it's not broke, leave it alone, I guess. Now, we know that the pullback to the BVC holds more often than it doesn't. And we did hold for 3 30-minute candles. We broke below. This is where we opened last night, and we ran right up to the long target. Overshot it, but just a little bit. Support sends the market looking for resistance. This resistance came in right at this low put in at the open of the session last night. Would set us back up to the target. Then we just kind of consolidated sideways. We peeped above the target, ran into resistance, back to the BVC, consolidation. Then we got a leg, and a little bit of a retracement, then a continuation of the leg, and buyers came in early. We would have expected support to be here. Sometimes buyers will come in early because they don't want to miss the move. Support sent us to resistance. Resistance sent us back to support at the step line. That sent us up to the BVC. Got blue and climbing. So when you approach the BVC and you have blue and climbing or red and falling overhead, then that's an indication that price may trade through the BVC, as it did here and as it did here. Now, we spiked it here, okay, right up to the previous bearish cross. Whenever you have a bearish cross that leads to an extended move, first time price revisits that area will almost always be good resistance, and it was. But that resistance sent us back to support at the step line, with blue and climbing below. That pushed us through the VBC, through the target, And we took out the high of the session right here by just a little bit. 55.83 and a quarter up to 55.86 and a quarter. So 3 points. In the grand scheme of things, that's not a lot, but it is a higher high. And with price above the BBC and blue and climbing to support it, is there the potential for us to take out this high? Indeed there is. And are we well above the highest weekly trading zone on the ES? Indeed we are. On the Dow, here's where we opened last night. Ran into resistance at blue and climbing. When blue and climbing gets directly above price, that can become resistance because it's often on its way to turning into red and falling. And that red and falling pushed us down to the BBC. Now the first time down, we bounced, but we bounced into resistance. And that resistance took us all the way down to the weekly trading zone. That's the highest weekly zone for the Dow this week, 4,600. Support sent us to resistance, which sent us back to support. Red and falling turned to blue and climbing. And now we have a high on the day at 48.44. This has been an extremely unusual, volatile week. But today, not a lot of volatility. I mean, look at yesterday. We had lows down around 41.15. We ended the session up at 47.21. So today, even though we've traded higher, it's a narrow range day compared to yesterday and the day before. So zones may be pretty tight next week. On the Russell, here's where we open. Ran up to red and falling, resistance. But red and falling turned to blue and climbing, so we just kind of consolidated, and this pullback held, and this pullback held, and this pullback held. But red and falling took us below the BBC, all the way down to here. Again, buyers came in off the 8:30 news, and we had 10 o'clock news. There's the 9:30 open. That's typically the largest candle on the day. This candle continued up to the long target at 21.63, which you can see is right here, where blue and climbing turned to red and falling. I haven't taught you a lot about that, but it's important. So at some point I probably will. We're above the BBC, we've got blue and climbing, so that creates a window of opportunity. That's a conservative window from 21.57 to 21.59. That's 2 points. That's enough to get your goal for the day. Now, price could easily push through that, but anticipate resistance at the high of the session until proven otherwise. You got to make sure price gets above this swing high before you enter into a long position. And again, while this window of opportunity only represents 2 points, there could be another 3 points on deck up to the target and 4 points up to the high of the day. In Q, scrunch this up a little bit. Okay, so here's the open last night. Made a run right up to the target. Okay, right at the top of balloon climbing, where it rolled over and became red and falling. So resistance sends us to support. Support came in at a place we would have expected support to kick in here, but the markets are bullish, so it came in early. It sent us back to the target, back to the stop line, back to the target. We overshot the target. High of the session so far on the NQ, 19,683, well above the highest weekly trading zone. Balloon climbing turns to red and falling. That takes us below the BBC. And again, we find support in an area where we would not normally anticipate support. That happened at 8:30 when worse than expected econ news came out. Although it wasn't high impact, and even though it was negative, pushed the market all the way up to the BBC, which we expect to be resistance, and it was. We came back to red and falling, and when red and falling gets directly below price, that often becomes support because it's on its way to balloon climbing. So we pushed through the zone, took out these highs, and made another run to the target. So far, we've put in a lower high. Now, we're poised to continue to move higher because we're above the BBC and we have balloon climbing below us. Once balloon climbing crosses the green line, that is a bullish cross. Okay? So, right now, for price to retrace, it's got, now the step line's potential support. But if we trade below that, then we got support times 2 right here. BBC and balloon climbing. And that could give us a long opportunity back up to the target and to the high of the session. On crude, as we mentioned earlier, crude after a big week sort of fizzled. This is where we opened last night, consolidated along the BBC. Every pullback held, red and falling, took us down to the short target, down through this zone, and even this zone. So we spiked that zone, still had one more zone below. Go left, you can find the reason for that support. Support sends us up to resistance. Resistance sends us down to support at the zone and balloon climbing, which pushes us to resistance, which pushes us back to support. Now this is resistance times 2. Got the BBC and the zone. So right now on crude, got a window of opportunity right there. From 76.50, conservatively call it 76.40. That's enough to get your goal for the day. And then expect support at the zone until proven otherwise. At a leg, a retracement, a leg where we put in a higher low, and then we put in a lower high. But the fact that we're below the BBC and below the zone, we're below balloon climbing and the step line. So the path of least resistance is back down to this low, which is also the zone. That low is exactly 76.30, and the zone is 76.25/76.30. Gold on a rampage. Sideways off the open, we get above the BBC, got the perfect stack, price, step line, BBC, blue and climbing, and the BBC. Takes us right to the target. Through the target, we not only took out the high of Thursday, we took out the high of Wednesday. We pushed through the zone. Only three things happen at a weekly zone. The most common is consolidation. That's about 70% of the time. 20% of the time, you'll get this, rejection. 10% of the time, the slice. That's when on the 30-minute chart, price slices through the zone like it's not even there. When the slice runs out of steam, it will typically retrace back to the zone it sliced through and continue in the direction of the slice. Now, the step line has already crossed blue and climbing, which is an indication for a pullback to the BBC. And if we consolidate sideways, the BBC is going to rise up to the highest weekly zone, which we're currently above. Okay. This has been quite a volatile week. Now we've got a nice wide range today, so that will lead to wide zones probably next week, unlike the indices. Silver. Here's where we opened last night. Ran into resistance right there, where price ran into blue and climbing, which again, when it's directly above price, has the potential to become good resistance because it's on its way to becoming red and falling. And we got below the BBC. We had the perfect stack on the way down. Price, step line, red and falling, BBC. And while it didn't take us all the way to the zone on that move, it did take us to this low right here. You only need 2 pennies in silver to get your goal for the day. This candle opened at 28.30. Put in a low at 2018.5. So we'll call it 11 points or 11 pennies, which would be $550 per contract traded in that 1 30-minute candle. Once you ran into the support, again, buyers coming in a little bit early, up to resistance, back to support, back to resistance, and this time support came in above the zone. Support sent us looking for resistance, which we had momentarily at the BBC, then we overcame it. Then the retracement held. Pushed us higher, but we failed to take out yesterday's high on that move. Sent us back to the BBC support. This time it pushed us all the way up through the target and all the way to the highest weekly trading zone. These are the zones that were published Monday morning at 6:15 a.m. Eastern. Resistance, support, support, resistance, support, resistance. You get the idea. This zone here is 2508/06, and that low is 2808.5. Again, it only takes 2 pennies. But silver's probably not the best market for a new trader, but it can be a very good market once you get your legs. All right, last market, euro. Here's where we opened last night. Ran up to the BBC, consolidated, We had blue and climbing, so that helped to push us above BBC. Basically up to this high from yesterday, which sent us back to support, back to resistance, this high, and this high, see? The horizontal line. Resistance sends us back to support, sends us to resistance at the zone. So we consolidate for 1, 2.5 hours. Then we get a kick in the pants that takes us up to the long target. Resistance, that long target is based off the bearish cross from yesterday. You have a bearish cross that leads to an extended move. The first time price revisits that area will almost always be good resistance. Same is true of a bullish cross. Got a bullish cross here, and market found support here. Now price is sitting on top of the BBC, and it's been sitting there for quite a while. In fact, this chart is not updating. See, we've actually overcome. In the high of the session, we still had that resistance at the bearish cross. Now we've traded up to 275 and resistance right above us is at 295. Everything's in place for higher prices. We're above the BBC. Got price, step line, blue and climbing, BBC. Again, this is the highest weekly zone this week for the euro. It's a pretty rare week where we break so many of the highest weekly zones. This resistance that we highlighted earlier at the 24% fib retracement, we got a doji going on there. Your next resistance is going to be at the high of August 1st, 5,603.75. And then after that, the 38% fib extension, which is roughly 56.18. Here's the 50, here's the 62, and the all-time historic high. Still has the potential to become a dead cat bounce, but we won't know until this high is taken out and closed above. That could happen today. Could happen Sunday night. Well, Monday. Because we need to see a close above it. Remember, we're in an uptrend. Leg, retrace, leg, retrace, leg, retrace, leg. The price could go no higher. Then we began what looked like the beginning of a downtrend, but may have been just a deep pullback, and the uptrend may still be intact. Whether you agree with it or not doesn't matter. You got to trade what's in front of you. Leg, retracement, leg, retracement, leg, retracement. And right here is where we would have expected another leg to the downside. But the happy dance is in full effect. And I guess, let's see, 2:45 is Kamala's speech. So is that about an hour from now? 11:45. I'm on Pacific time, so it's 10:55 here. But her speech is at 2:45 Eastern. What'll be interesting is to find out if she's going to actually take questions unscripted from the audience, or if it's just going to be another scripted, highly edited conversation like she had yesterday with her running mate, Tim. So these are the numbers to be on the lookout for. This is big picture. The bigger the picture, the more important the information it conveys. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. Once you become a passport holder, you'll have access to the live training room, 2 hours every trading day. It's an interactive environment. In other words, you're looking at live markets, you're looking at real trades, real money, and you're asking questions. Never feel like your questions are going to interrupt the process. Questions are the purpose of the process and the live training room. So when you take the trial, whether you ever become a member or not, you can gain a whole lot of market information during that week. If you want to learn how to trade for a living, then of course you will become a member. And you'll ask every question that pops into your head. Because their strategy is pretty simple, you'll eventually run out of questions. Or you'll ask a question and realize you already know the answer. Because the question that you asked 6 weeks ago and got an answer for, you'll get the same answer today because it's a mechanical model. Along with 2 hours of group training every trading day, you have access to one-on-one private mentoring at no extra charge. The strategy you learn, the indicators that you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That cycle has been in place since the inception of the markets. It will remain in place till the markets cease to exist. Why? That's how markets work. As a passport holder, you'll get the Logic 247 alerts, which will help you learn to read the chart. You'll get the concierge trade alerts, which will show you whether or not you've learned how to read the chart. You get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. Everything a trader needs, all under one roof, one low price. And that includes around-the-clock support. So let's go to our good word for the day. Yesterday we talked about beware of self-pity. Today we'll talk about, instead of self-pity, choosing the right attitude. Romans 12:2. Be transformed by the renewing of your mind. Long before William James, the father of American psychology, was attributed with saying, "The greatest discovery of my generation is that human beings can alter their lives by altering their attitudes." Way before that, God said, "As a man thinks in his heart, so he is." Proverbs 23:7. Often it's our thoughts, not our circumstances, that determine our happiness. We keep thinking we'll be happy when certain things happen. As an example, a parent might say, when little Tommy finally starts primary school, I'll be happy. And they are, for a while. Next, when Tommy leaves secondary school, I'll be happy. And they are, at least for the summer. Next, Tommy's graduation from university brings the same promise. So does his marriage and the birth of the first grandchild. The problem is, the parent hasn't learned how to be happy between the happenings. When your happiness is controlled by something outside yourself, you will always be hostage to people, places, and things. That is not how God wants you to live. A victim of circumstances beyond your control. The psalmist said in Psalm 34:1, I will bless the Lord at all times. His praise shall continually be in my mouth. David chose the right attitude, and you have to do the same. You also must maintain it. That's the hard part. It's like the old farmer who said, the hardest thing about milking cows is they don't stay milked. And it's the same with attitudes. They don't stay changed. You have to work on them every day. It's called renewing your mind. And the way you do it is by getting into God's Word and getting His Word into you. So my question is, are you doing that regularly? That's a good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.